Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, why is it that whenever I buy a stock its price falls? Answer by Anupam Thakur. There are two aspects in your question. It's a part of this business. It may happen with everyone because of some unexpected news or event, or because of usual correction in market after achieving new high. Correction is obvious. For example, see Nifty between 19 to 25 September. After achieving new high, correction started in Nifty at 19th of September and it's going down. Geopolitical situation, US versus North Korea, giving fuel to this correction. If it's happening without above reason, then you must fine-tune your strategies. Most reliable way to overcome this situation is trade with price action. First, have a look at this video. This is a pendulum. Share price also move according with same theory. Price goes higher up to a certain limit, called resistance, after it starts falling down to a certain limit, called support, and process repeats itself. Always spot a strong support and resistance zone in chart before placing order. If you spot strong support and resistance, you've won half the battle. Let's take an example. I request you to read this answer in free time with free mind. Try to understand every point with reference of image. In above daily chart of Axis Bank, last update on 18th September, you can see that price range between 524 to 531 acted as strong resistance in previous trading sessions. See red circles in image. Price tried to break this resistance more than 5 times, but every time price fell down. So this zone, between 520 to 526, can be seen as target price. On 15th of September I saw good opportunity in Axis Bank. I identified strong resistance and support, and placed buy order, 15th September at 514.15 RS. And I closed the trade with profit of 1.63%. So I've set my target around 522, and you can see in below image, price range from 520 to 526 acted as a strong resistance and price started falling down. See blue arrow in image. So this is how you can fine-tune your strategies with price action and can make your trading more profitable. Hope this will help. Answer by Abhishek Kumar. I know the exact reason why this happens. But like all good answers, a piece of saying first. Fear runs higher than greed. That's why prices fall rapidly but rise slowly. The problem you are facing is common to all new investors. A part of your problem is real while some part of it is paranoia. I will explain the paranoid part first. While the general trend of the market during a normal period is upwards, stock prices fluctuates multiple times an hour when the stock market is open. If you focus on these fluctuations, you are going to feel you have lost money. However, you must develop the skill of separating signal from noise. Unless your objective is making money in an hourly intraday trade, which I cover below, only a continuous fall due to a known reason is a signal. My advice? Do your research well, and before initiating any trades, develop an idea of the returns you expect and for how long you plan to hold the shares. Longer the better. Now for the part which really might be a problem. In this beginning of my career as a day trader, I used to lose money even if I sold shares at a higher price than what I had bought them for. Turns out, my broker was charging massive brokerage for all the services, which are freely available on the internet, it provided. If this is one of the reasons you are unable to make a profit, consider switching to a different broker. How intraday traders do it? Short answer, intraday traders do it by doing rigorous research, taking risk, and using a small trick. To be successful as an intraday trader, you must do rigorous technical research on the stock you wish to buy. Take a hurried decision and you may lose. I personally keep the conclusions ready before the markets are open. The second point, intraday trading is highly risky. If you lose money, move on. Learn from what went wrong and try again. Also, if you are indulging in intraday trading, it is important to have a cheap broker, as intraday gains per transactions are not large. One particular trick I want to share is this: buying a lot of stocks you expect to do well and putting them for sale immediately on a limit order. A limit order specifies the least price at which the order should be executed. This will make you a large sum in a small time interval but also requires a large risky transaction. Answer by J. Hauer. There is actually a very good reason for this, and it has to do with market sentiment and the cycles of human psychology. I'm guessing from your question that, in all likelihood, you are an average retail investor, and I mention that not to insult you, but because it's a key factor in the entire equation. Here's how it factors in. The first people into a stock, just as it's about to take off, are called the smart money. They consist of insiders, who may work at the firm and know a new product is due out and so forth, the hedge funds, who have access to much better research than the average person, and the elite traders who are exceptionally good at technical analysis, technicians. Those people all start piling in early, and they drive the stock higher. More buyers than sellers equals higher prices. Now, here's where it gets interesting: the higher that stock goes, the more attention it attracts. And there's a second middle tier group of buyers that isn't quite smart money, but isn't quite a retail investor, either. These are people such as 401k managers and your more savvy independent investors. They tend to get in near the middle of the trend. On the backs of these new buyers, the stock thus continues to move higher, and it likewise continues to attract even more attention. So now it's being mentioned on CNBC, and on MarketWatch, and maybe Jim Cramer tells you that it's the best stock of the year. Or some garbage. And this is where you, the average retail investor, come in. The problem is, by the time a stock makes it to this stage and finally attracts the attention of the media, and thus the average retail investor along with it, the easy money has already been made. The smart money is now going to use all this exposure to unload some of their shares to you at a healthy profit. This is where the expression "buy the rumor, sell the news" comes from. And they're naturally going to be unloading more shares than you personally can absorb, and possibly more than the entire market can absorb. So suddenly there are more sellers than buyers, and the price drops right after you got in. That's why it seems like the price always drops right after you buy. You are buying far too late in the trend. Do please note this is not the only possible reason, but it is the most common reason. Now, this doesn't mean the stock won't recover and rally again. Stocks tend to move upwards in waves, so depending on which wave you entered, you may still have another wave, or wave and a half, up still remaining before a bigger correction, or you may not. The problem is, unless you understand technical analysis, you're really just buying blind, and you have no way to know if a trend is already over, or if it's just getting warmed up. So, since average folks don't have access to inside information, and we don't have the resources of a hedge fund, we have no other way to level the playing field except by getting really good at technical analysis, TA, so that we can recognize trends as they begin and avoid them as they end. I've been doing TA for about 22 years, and it's absolutely like voodoo magic sometimes. Once you understand TA well, you're unlikely to buy at the wrong time, and even if you do, you'll know where to exit. People who can't make TA work for them are either doing it wrong, or trying to apply it at the wrong times. You can't always know what the market's going to do. You have to learn to recognize when you can know, and when you can't, and avoid action when you can't know. Anyway, hope that helps.